Felix here, and welcome to this pre-market live stream. Winston's joining us here as well, and markets are still red. There's blood in the streets, probably some of your blood, and I want to make sure that by the end of this little session here in the next 15 minutes or so, you really understand what's driving it, what the opportunities are, how to take advantage of what's going to come next, and end up as chilled and relaxed as this guy here, this one here. Winston, which of course is my chief researcher, Winston. So I'm going to share my screen with you so you can see what I've got in store for you. And here we go. We're going to walk through what are the algorithm funds. Are they buying or selling? Very, very important to understand that. And if you've never heard of algorithm funds, I'll explain the impact for you in a moment. And did you notice at the end of yesterday, we kind of bounced, like it started a really deep red, big gap down. And at the end of the day, there was all that buying. Why did that happen? I want you to understand that because it'll really help you make better decisions today. And what about the blackout period? Is that happening? Why does it matter to you? What really is it? Why is it so key? I'd then also like to know why my pen is being weird. And then I'm going to tell you what should actually keep you up at night. Because, yeah, there is really one thing here that should really kind of worry you. And that's also number 5. Should you be worried? Well, don't worry, we're going to end on some positivity here. I'll give you something that you're going to want to write down if you want to be sound asleep tonight. And then I'm going to give you some good news. And then we're going to round off here with literally one screenshot from a research report that is just out today from JP Morgan, the most important bank in the world, that will tell you exactly what's coming, how to position yourself, and I'll give that to you. So that's sort of a big bonus today, and then we'll do a nice Q&A. So I'll do my utmost to answer all your questions here. And if these 8 things would be valuable to you, just write value in the chat, and that way I see that you're here, that this is going to be useful for you, and it'll allow Winston and I to make more videos like this, give you more of this kind of information. So shall we get cracking now? I'm just waiting for the values in the chat. As I'm slurping my protein shake here. Okay, Julie, John, you see some value here? Doug sees some value, Mark sees some value, Jonathan sees value, and they're coming in so quickly I can no longer read them out. Brilliant, love you guys. So let's then look at what really matters here. And should we do this with or without Winston? You can also let me know that. Algorithm funds. I talk about these guys quite a lot, and he actually fits rather soundly on the screen. I think there is something soothing about seeing a sleeping golden retriever through the midst of the pre-market. You want to see the pre-market? If you don't, avert your eyes. Now, futures are down about 0.3%. I'll talk about the VIX in a moment, because this is like actually background story. We should probably actually start with this. Let's just start with this. The fear index, right? You're feeling a little fearful. Maybe you're feeling a little bit fearful. When it's above 20, and that's literally where the red line is in here in Trade Vision. When we're above 20, and this is Trade Vision that I'm using, which is the software that we built to give you tremendous value, just like this video here. Above 20 is fear. So right now there is fear, and that should tell you quite a lot about what to do. And I'll revert back to that in a moment, but this is pre-market. Tesla is up a little bit. Nvidia is sort of flat, and everything else is modestly down. Amazon getting hit here the hardest out of the big boys, but still not exactly the green that we were hoping for, right? So let's get back to the program here. CTAs, these are computer funds. These are algo funds. They're dumb as shit, sorry, but they are. They've just been told on certain rules, you do the following. So what happens is if we go up, they have to buy a lot. If we go sideways, they're still buying a little bit. And how much do they have to buy if we go up? If we have a rebound, because Trump announces something that's less than what's feared, they're going to have to buy somewhere between $30 to $55 billion in S&P stocks, okay? S&P 500. Not global stocks, any of that, just S&P 500. It's quite a lot, right? So if we go up, these guys are going to be chasing the rally, and that'll push us even higher, which will definitely be useful. Winston's in the way. Oh dear. Is he? Actually, no, not on my end. Not on my end. I think we should be good. So now you know that. We'll get back to what, let's look at this first. Yesterday, did you notice at the end of yesterday that the market looked pretty glum? I'll show it to you on a chart. So if we open up, say, the S&P, right, SPX, and we have some movement on the Winston front here, by the way. There he is. He's moving around. Where are you going, Winston? Why are you moving off screen? There he is. Can we zoom out? Can we zoom out? No, he's moved off camera. That is not what you're meant to be doing, Winston. Very naughty dog. Very naughty dog. So, in all seriousness, though, if you look at yesterday on a 5-minute chart, it's a good thing to do, actually. Look at the end of the day, look at the market on like a minute chart or 15-minute chart and see what's going on over there, and then wait for you to crash the software. Why does that crash the software? Let's try that again, shall we? Let's try it one more time. Here we go. There we go. There we go. There we go. So what do you see? Well, what happened yesterday, we started the day with a gap down here, right? It's pretty hideous stuff, right? We gapped down here. That was awful. We recovered sort of throughout the day, but a lot of that, well, this chart doesn't actually show exactly what I thought it would show. Yeah, the recovery was kind of kicked off from 2 p.m. in the afternoon. Okay, that's kind of the recovery there, right? After lunch, there was somebody buying a lot. So who was that somebody buying a lot? Well, let me tell you. It was pension funds. Pension funds had to, as I've been telling you for the last 2 weeks, at the end of the quarter, which was yesterday, they had to buy a lot of stocks. So we see this big inflow of about $15 billion here into the market at the end of the day. Lord Leo, you like me, but you don't like dogs. I'm sorry, my friend, we can't be friends any longer. And so we got that 15 billion inflow yesterday, and that's kind of what pulled us up. So it wasn't some enthusiasm. It wasn't that people just became bullish suddenly. It wasn't some big great news on tech stocks. It wasn't retail investors. It wasn't hedge funds. No, it was just pension funds who had no choice but to buy yesterday. And that means there wasn't a tactical buy the dip. There is no optimism. It's just pension funds. Sorry to burst that optimistic bubble you might have gotten somewhere. So really what I want to say to you is this. Before you buy anything today, because there's all that buy the dip crowd out there, right? Watch this first. And you will thank me later. I promise you that. And what am I talking about? I'm talking about learn the rules that the most successful Wall Street investors apply. How do I know the rules? I've learned it from them. Like literally my mentors. I've got about a dozen mentors. 3 or 4 of them were market makers, which means they really schemed the market. I've got guys who've been floor traders for 10, 20 years, worked on the stock exchanges, and they really know their stuff. They're all saying the same thing. And they are singing off the same rule-based hymn sheet that you get if you watch this masterclass. It's free of charge. It'll help you get free, and it'll help you not do things you shouldn't be doing right now, because it's a pretty precarious situation that we're in right now, right? Snook there says, you got some value out of that pension fund tidbit there, right? That was useful, right? If that was useful for you, just write like pension fund in the chat, and I'll see that one made some sense to you. Leo, are you still allowed to listen? No, you're not. No, you're not. Winston, I don't think Winston will forgive you. Winston, will you forgive Leo? I think not. Look at that evil eye there. You see that evil eye? No, it's all over, Leo. We've broken up. And if you don't believe me that this class is valuable to you and these rules actually work, and I get many people are cynics. I'm a bit of a cynic. This is a student of mine, Catherine. She sent this to us yesterday, and she wrote this. Been a member since January, learning about stop losses, saved my portfolio for sure. Even for stocks that were in the red, the skill saved my portfolio another 10 to 20%. Some of these stocks have gone down another 30%. I did what I didn't want to do and sold when the numbers hit, our stops. And she says, for some reason, we've been trained to just watch our stocks go down and down and down. And it's been a struggle just to sit and wait since then. It goes against every instinct I have, including the hold and buy the dip nonsense. She says, I'm so glad the coaches encouraged the group to be cautious and practice good risk management. Every time one of my stocks sold, I'd get so mad, but now looking back, I couldn't be more grateful. You see, applying risk management is hard, but if you have people who look over your shoulder, if you have mentors with that experience and you trust them and you understand why you're doing it, it literally saves her, in this case, 10 to 30%. So what's she going to do? When she buys back into this market, based on the rules that are in the masterclass that you can literally watch for free down below, she will own about 20% more shares than before. So through this dip, Catherine is going to own about 20% more stocks than she did pre-dip. So what's going to happen when the market recovers? This lady is going to be wealthier than pre-dip. And that's why we love dips, because dips are actually wonderful if you know how to work this, right? And that's why I'm putting this out there, because I want to encourage you to learn this so you don't go through this dip bleeding and then the next dip bleeding. And, you know, you just, some people spend 30, 40 years of their life working really, really hard. They put all the money into one portfolio and then boom, it all blows up because the market tanks 30, 40, 50, 60% and they get scared and they sell. It's avoidable if you've been taught the right rules, right? And it does natural, it is, as she says, it comes against, she says, look, it goes against every instinct I have, right? Because we've been programmed in this idiotic fashion by Wall Street and the brokers who want to make money out of us. So who's going to go and watch the masterclass and learn what Catherine's going to do? Just write Catherine in the chat. Doesn't matter how you spell it. Just write Catherine or just a K in the chat. And then I know you're going to go and watch it. And in the meantime, while you'd put in the Ks in the chat here, I'm going to walk you through another key piece of information without which, well, you're pretty rudderless today. Now, Pelican says, Felix, easy to say nobody knows the bottom. Exactly. Nobody knows the bottom. Nobody. I'm not saying that I know the bottom. I'm saying that we buy after the bottom at a certain point in time based on a rule that every successful investor out there will agree with. That's what I'm saying. Nobody knows where the bottom is, precisely. So we sell before the bottom, we buy in after the bottom, and that way we typically, on a dip like this, at least on the tech stocks, we should be about 20% better off, right? Okay, it's got some Catherines here from Brian, Chi, and Torgrim, and Juma, and a lot of you guys there, DP, and the Mindful Journey, loving that, brilliant. So what is this blackout time? Jago, you're super kind. I appreciate that. Appreciate you showing up for yourself. Blackout means the biggest buyer, literally the biggest buyer of stocks. It's not pension funds. It's not hedge funds. It's not JP Morgan. It's not, you know, Nancy Pelosi. It's stocks themselves. So companies buy their own stocks. That's the biggest buyer of shares out there. And they stop doing that when we get into the earnings window. They're not permitted to. And right now, well, 87% of the S&P have entered their blackout window, approximately, which means this buyer is no more. Right? So these guys are not buying, and that makes the market more volatile. It means it's easier to go down because these guys aren't there to like prop up the market. And that's something you want to bear in mind given tomorrow's announcement. Which is also why I'm not saying buy the dip today, because the market's reaction tomorrow could be bigger than you'd expect if it's negative, because there isn't, the biggest buyer is basically on holiday, right? They're on the beach. Now, does that make some sense to you? The buyback thing? Does that buyback thing make some sense to you? Put a 1 in the chat if it makes some sense to you. So this here is probably the only thing that actually worries me. And I'm an optimist. I don't usually get worried very easily, nor does Winston. Winston, we still got your one eye in the window. We do, don't we? Let me move that camera a little bit. That's a little bit more centric, isn't it? This is all about dogs, by the way. This is a dogs and finance channel. There he is. He's like, oh, it's a bit too close. Move it away. There we go. That's better, isn't it? There we go. So Winston isn't too worried about this. And in all seriousness, this chart, what does it show? Well, it shows what's happening to earnings guidance. Are they moving the earnings up or down? Are companies saying next quarter will be better or worse than expected? And right now, you see that red thing there on the chart? That unpleasant red color? That's basically downwards. So basically downgrades in expected earnings, right? And you see that number suddenly? That is pretty low, which means there are a lot of downgrades. The kind of downgrades that we last saw in 2014. And what happened afterwards, have a look at the chart, it wasn't pretty. That's what worries me. I'm not worried about the tariffs or the Trump thing or the politics or Elon or Europe or Ukraine or any of that. None of that really affects the market all that much in the long term. But falling earnings really, really would knock the stuffing out of this market, right? And this is why this is important, right? Does that make sense to you again? Does that make sense to you? Put downgrade, or just to put a D in the chat, and that way I know that this landed for you. Now, we've got 4 more key points to run through here, and then we'll take some questions. Because the question really is, should you be worried right now? Should you be worried about that? Again, this is about earnings, because in the long term, the market is actually driven by profits. In the short term, it's driven by, noise, fugazi, all that kind of stuff. Okay, I'm seeing a lot of D's here in the chat. Brilliant. Okay, I'm glad that's landing for you guys. This is a chart of the S&P 500 earnings growth outlook. So the expectation, it starts in 1985 for no particular reason, except that's when greed was still good. Remember? I still worked with a generation of bankers who were from the 80s, and they all thought greed was good. And it became a little bit less sort of socially acceptable or something. Those guys, they still drove Porsches and wore Rolex watches and gold and all that kind of stuff. And literally, I had my boss, it's a fun, true story. My boss is at this beautiful apartment overlooking Hong Kong. Amazing view. I always watch the fireworks from the parties there. It's amazing. His kitchen had one ingredient. His fridge had one ingredient. Every cupboard in the kitchen, one ingredient. And that one ingredient, of course, was champagne. Nothing else. There was no water, there was no food, there was no toast, there was nothing, no salt, nothing. The man lived entirely off 5-star hotel restaurant food, Michelin star food, and at home, apparently he consumed only champagne, which is very funny. He was a proper 80s banker. That's what they used to do. Anyway, what this chart is saying to you is that the market moves cyclically. So we had this lovely rally here pre-COVID because we got tax cuts, the Trump tax cuts. We then went down pretty harsh because everybody caught a sneeze. That was COVID. And then means the money printing happened, which was insane, right? Just money printing more than anybody ever printed before. And then, surprise, surprise, we got inflation because we printed $4 trillion of money. The Fed, by the way, still does not acknowledge that printing $4 trillion of money had anything to do with the inflation that we've seen, right? No, they just sort of swept that under the rug. And then after that, we got the AI rally. Now, right now, we're seeing this little dip here in earnings expectations. And it, of course, worries me because, well, the pattern isn't exactly brilliant, is it? So that's what I'm going to be watching out for in this earnings season. And I think that is the #1 thing to watch out for at the moment. It is, what are the big boys going to report for earnings? Wouldn't downgrades make it easier for stocks to beat earnings? Mark, I like your contrarian thinking. I do. But if everybody downgrades, this is companies themselves saying it might not be as wonderful in the future, which has an impact onto the downgrades, then, things might get a little bit shaky here. Now, if you want to sleep well, write this one down, because the earnings downgrades are not equal. Not every sector, not every company is the same. The one sector that we expect to have better earnings is the topics. Now, you might not be invested in the topics, but there are ETFs on that sort of thing if you want to get exposure. The second one that is actually positive are financials. And I'll show you in a second why. Financials. So I'm trouble spelling words with more than 5 characters. And everything else, pretty much, industrials is pretty much flat. Industrials. And everything else is expected to go down. Real estate, energy, discretionary consumer spending is sort of the worst of it. Tech, still somewhat negative, but the big boys are, you can see that, right? And you might want to write this down, take some notes on this of where we are right now in terms of expectations. So useful, yeah, useful, put useful in the chat and I'll see this as useful for you. Now it gets better. If you want good news. And then there is the one thing you're definitely going to want to screenshot because it's insanely useful. Well, this is the good news. American stocks just had the worst quarter in 23 years compared to the rest of the world. 23 years. That's a pretty long time period, right? Since the good old 80s. The last time we had this kind of underperformance, it was the WorldCom Tyco scandals, when those companies basically collapsed. And then in 1989, when the Japan bubble burst. Pretty extraordinary events, right? COVID, no, that wasn't that bad. 2008 wasn't that bad. It'll be somewhere here. 2000 wasn't as bad as this. Crazy, right? So this is really extraordinary. And I'm always a bit of a contrarian. I always think we should go a little bit against the trend. Not too much, but we should go a little bit against the trend. So it's kind of saying to me, we've probably punished American stocks too much, and we've probably bought too many German defense manufacturers. Because that's what's been rallying, right? These last few weeks. So it makes me a little bit more optimistic when everyone is that bearish, because it's a pretty extreme setup. Because we don't have 2002 type accounting scandals. We don't have terrible economic data. We don't have high unemployment. We don't have terrible earnings. We don't have a big war or anything like that. All we've got is people are worried about what Trump's going to say tomorrow. So it's fear. Right? That's all it is. It's all fear, right? And that's why the chat is so orange, Neil. Now, this is the big one, as my friend Biggest Dickers would say on here. This is the good one. So this is a screenshot literally from a report, very long report by JP Morgan. And this comes from their stock research and quant team. And I take a screenshot of this. Seriously, take a screenshot of this because you're not going to see this one again. And it's telling you what JP Morgan thinks. And bear in mind, this is the most important bank in the world with some of the smartest people there in the world. And they're saying which industry is going to be affected negatively by the policy changes we're seeing. If you look at the trade and tariff thing, and obviously the more red arrows, the worse it is, and the more green arrows, the better it is, right? So who's the trade tariff thing really, really bad for? Well, discretionary consumer spending, because most of that stuff's made in China. Technology, because again, a lot of that stuff's made overseas. Consumer staples, a similar story, it's mostly imported. Industrials, again, steel, aluminium, all that stuff, lumber, all that stuff that goes into this is made overseas. Who is it good for? Utilities. The only thing really that benefits from the whole trade thing, we think it's utilities. Okay. What about immigration? Which sectors is that really bad for? Well, the ones that employ the most illegal immigrants, right? So it's your, that make me popular here today, right? Consumer staples and so on. Real estate also because it just reduces demand. And what about tax cuts, right? There are going to be tax cuts that'll follow. This is the sort of the playbook. And they'll benefit industrials a lot. And SMID, what is that? Small and medium something? Is that what it stands for? What does SMID stand for? Anybody know? Let's Google that. SMID. World Small Caps. Small and mid caps. Small and mid caps. Okay, as we thought. So kind of small companies, they benefit a lot from it. But they also get punished by the trades and tariffs. So it's kind of pretty even there, right? Now, what about regulation? They're going to do all that deregulation stuff, right, to make America less regulated again. It's going to benefit the energy sector. So far, energy is actually facing pretty well because we've only got green here, industrials, okay? So it offsets a little bit the trade and tariff stuff there. Financials. This is one reason I'm bullish on financials. There is no negative impact on banks from the tariffs. They don't employ any immigrants, well, unless they've gone to, Wharton School of Business or something like that. They don't manufacture anything. They're not really impacted by Doge or foreign policy. So they just benefit from laxer financial institution regulation because they gave a lot of money to the people who got elected. Small companies also will benefit, we'd expect. What about the whole government efficiency drive? Who does that benefit? Well, tech, probably. Yeah, probably tech, because a lot of the government will just spend more money on tech. Now, not all tech is equal, because as we've seen, they had 1 billion licenses to McAfee antivirus or something, but they're going to spend more money on, your Palantir and your kind of automation things and your probably cybersecurity stocks and that kind of thing, right? So is this useful? I think this is insanely useful. So do please take a screenshot of it, because I'm going to take it away. And using Google instead of Grok, yeah, the window is still fast. It's still faster to open. That has to change. Once that's built into the browser, we will Grok from here onwards. Now, I guess some very silly stuff going on in the chat here, my friends. Okay, if this was useful for you, smash the like button. There are only 300 likes here. There are 2,800 people live. Not exactly the kind of votes that we're hoping to get here, right? I mean, Saddam Hussein got 99% of the vote. That's sort of what we're aiming for here today with the likes, right? So William says, very useful, brilliant, love that. And oh, I don't want you to see what I'm grokking. Yeah, because it shows that, doesn't it? Yeah, be very, very give away my insights here. So shall we have a look at the market then? I think we probably should. So avert your eyes. This is the pre-market. Oh, not great. Amazon down more than 1%. Apple down more than 1%. They're worried about tariffs. Apple, I think justifiably so. Amazon probably a little overblown, because Amazon makes so much money now out of AWS and out of advertising, as opposed to selling foreign-made junk to American consumers. Meta down almost a percentage point. Do we think that advertising spending is going to go down because of tariffs? Do we really think that? Do we really think it's going to cause a recession? Caterpillar is down 1.4%. Does that make a lot of sense? How many of their parts are foreign? Maybe they are. I don't know. American Express is down. Are you going to stop swiping the plastic? I don't think I will. So that gives us a little bit of a feel. I did say to you at the beginning, and for those of you who've just joined me, this is what I would look at, whether you want to buy the dip or not. And that is, VIX is over 20. It's at 22.43 right now. And that means there is a lot of fear, a lot of fear. We don't like a lot of fear when we're buying stocks. So yes, it's come down somewhat, but it's spiking up again a little bit here. And it's still significantly above the safe sweet spot of 20. Right? That's where we want to be. This is a minute chart, by the way, which is why it looks a bit funky. We can go back to a day chart here. Scott says the market's just opened. Okay, brilliant. Well timed there, haven't we? We've timed that rather well here. And yeah, volatility is up again. The fear index 0.5%. Let's run through a couple of our favorite tech stocks here. Palantir down a little bit. Now, yesterday, you saw how beautifully it bounced off what? The support level. Now you get to the support level if you're a Trade Vision subscriber. There is a free trial. There's zero risk. You can play around with it. If you like it, you like it. If you don't, you cancel it. We're not going to charge you a single cent if you cancel it. If you're going to keep it, we will, obviously. But it's tremendous value. That's what you guys keep telling me. And I was just seeing the final images for the app and so on. So that's going to come out very shortly as well. So we're still near the top of yesterday's trading range. Obviously, watch out for the support that works so beautifully here. Tesla, which seems to be a political stock now. No, it's not a political stock. They make self-driving cars. That is very cool. If you don't want self-driving cars, I can't really help you. It just doesn't make any sense. But I know people have strong political opinions. If you let politics get in the way of your rational decisions, well, they're no longer very rational. So look at the numbers, look at the tech edge, look at the moat, look at the leadership, and then come to your conclusion. And then that's your conclusion. Tesla is actually up 1.7%. One of the very few stocks today that are actually green. Nvidia, 0.5% up, which is okay. But what we are worried about is Apple. Good old Apple is down 1.2% here right now. We also have down, as I just said, Amazon, 188, trading nearish sort of yesterday's range there, open rather, at 188, so down 1.1%. What about something like Palantir? Pretty flat right now. What about the financials? SoFi, flat, 0.26%. What about something like FOA? Still pretty flat. I got kicked out of that trade here, by the way, 2023. Still a good call. Now we're going into consolidation. What about good old JP Morgan? So I was just saying I was bullish on financials, and I think they are going to do well out of this. Yeah, they are down 0.7%. Snook, my friend, thank you very much. Waymo is the leader in self-driving. It's a bit like Ford is the leader in EVs, right? Yeah, you believe that. You believe anything. But yeah, they do self-driving. They do. I think Tesla is going to beat them to a pulp, and they'll be sort of the... there is Uber. What's the other one? I can't even remember the name. What's the Uber competitor? Sort of purplish logo, sort of cheap, nasty Uber. What was it called? Anybody? I think that's kind of what they are to Tesla, but obviously I could be wrong on that. Lyft, that's the one. Thank you very much, George. Scott said, Felix said, doo-doo. We should see whether Winston saw that one. Did you see that one, Winston? No, he didn't. He's soundly asleep now, isn't it? It's nice how he reflects on the very polished floor, isn't it? Double the nose. Tesla is the leader in promises. Ooh, okay, we got some Tesla haters in here. What's the mainstream media that you read, my friend? Oh, by the way, I didn't turn on a light. I'm half in the shadow. I'm gonna have to do something about that. 1 second. There shall be light, he said. Okay, now I'm properly lit. Lyft is great, is it? I've only ever used Lyft once. I was a little terrified when I did, and I never done it again. Only ever been in one of those XL Ubers since, but I'm a bit weird that way. Any other stocks you want me to look at, like Lyft, for example, which has been a pretty terrible investment, by the way. Really pretty terrible. It's trading at about $11. The 2024 high was 21, and the 2021 high was 67. Right. Horrible setup. And if you look at Uber, well, 2021 high was 63. Right now we're trading at 72. So I would rather be in the market leader than in the market follower, because the market tends to reward only that one. Aaron says, I'm crazy and I don't drive. That's okay. Actually, you know quite a few people. And in fact, it'll be good because you won't need to learn anymore, because it'll, you get driven around. PayPal. That one's really stuck, hasn't it? Ooh, look at that. Look at that. It's up 0.12%. It sort of tells you everything, doesn't it? This is a textbook example for why you don't want to buy and hold, right? Who wants to buy and hold this thing? This thing dropped like tremendous amount. From the top, about 90%, I think. 87% or thereabouts. 83%, something like that, right? And very avoidable. Like you could have literally exited up there. Could have exited up here in July. And you would have saved yourself about 80% of that 83% drawdown. That's the power of knowing what you're doing and not just blindly buying and holding because funds and Wall Street have taught you to do that because they want you to hold they will, but they want to hold on to your money, right? So if you want to learn that, literally learn that one rule, why you should have sold there and why you can see those sell-off rules happening right now, like the sell-off rule here was exactly there at about $87, $86. Right now we're at 65. It's super simple to learn. It'll take you 15 minutes of your life. You'll know it forever. Links down below, felixprehn.org/get free. In fact, I'll do one better for you. I'll put it in the chat for you. There it is. And I will pin it for you so you can just click on it. And if you want to leave this video right now and watch that, I'd be very happy. Literally, if the view numbers drop right now, you would have made me very, very happy because you'll be much, much smarter today. Yeah, the diamond hands crowd, exactly. They think you should still be in this. Brilliant. Now, okay, Zim, yeah. And I did a video on that a little while back, and I said I very much like the stock. I like the setup, well, a fundamental setup. And then I ended the video saying, I think it's too early to buy it. And a few days later, the stock drops on dividends, great big bouncy dividend. They paid $3.17 as a dividend. So the stock drops from 17 to 14. It's almost as if the numbers added up. But no, it's still not the right point to buy it. There will be a point, probably, but it isn't right now. And again, that's entirely based on what you learn if you watch the masterclass, as he says. I'm getting more German by the minute, aren't I? Is Walmart breaking out? So Soliber says, when you say pension funds board yesterday, did that time it at the bottom of the day? Is that just, no, they will have set that up with their brokers before. They will have said buy in the last 10 minutes of the day, last 30 minutes of the day. Maybe the brokers did a good job and they wanted to buy near the bottom of the market, but actually the market already recovered a bit beforehand. So it's probably just a setup. So normally like ETFs and funds like that, they will agree at about 2 o'clock with their brokers what they're going to buy at the end of the day, and then those orders get executed in the last half hour of the day. That's usually how that works. So it's usually less about market timing and more about it's just the way they do it. Walmart, is that a breakout? No. No, it's not. It's a nice little 0.8% move up, but it's missing every ingredient of a breakout, literally every single one. So my friend, go and learn the ingredients. I'll give them to you for free, and it stops me from having to repeat myself in every video. Go to felixprehn.org/get free, and you can learn them for free, and you will get free. You'll be set free. You'll be soaring. You'll be flying, that kind of thing. MSTR, yeah, it's still kind of consolidating, isn't it? Sort of not really going anywhere, but not super pretty right now. Why not? Because this yellow moving average line that I'm drawing next to is sloping down right now. So this obviously just depends on Bitcoin and just risk appetite. Should you buy the breakout stocks? Only, and if and only you have analyzed them, you've come to the conclusion that they're good buys, and B, that you actually have risk management in place to make sure that when they do make profits, you do take profits, and if they don't turn out to be breakouts, that you have very, very little downside risk. Otherwise, you are throwing darts into a dark room, hoping you're going to hit something, so don't do that. There appears to be a lot of money behind the Tesla movement. Yeah, there was a post today I saw on Twitter, a Wall Street Journal journalist, bit of an oxymoron, those two things, but you know, he was a former Wall Street Journal journalist, and he's gone to all the protests and he said, hey, I recognize all these faces. He knows them all. Here Winston is snoozing happily, because there were all these Democratic funded NGOs and so on, and they are now all, and he's making a list, he's put a website up with all these companies, well, not companies, NGOs and non-profits and so on, some political, some private, the private ones be doing something illegal, and how they're funding these protests. So this is nothing but political BS, and if you fall for it, maybe you're not quite as smart as you think. Sorry. It's not about me being pro or against Trump. It's just when there is paid for manipulation, this is it. It's a little bit like what Elon's doing in Wisconsin, right? He's paying people to vote a certain way. That is also manipulation. So if the vote in Wisconsin comes out Elon's side, then it's because Elon spent money on it. So same thing when people are protesting outside Tesla, it's because they've been paid to be there, right? So both is BS. different side of the aisle, but both is BS. So don't believe the outcome as a sort of popular vote. Amazon is green. Shall we have a look at that? Let's have a look at that. There we go. Amazon is green. That would be a big recovery, and it's still 0.1% down. So it's still 0.1% down. It's green compared to the open because we opened really low, right? Really went down there, but it's still down 0.1%. Don't spread lies, Felix. You see, just because you disagree with the facts doesn't make them lies. They just are uncomfortable facts. That's all it is, right? Elon is paying people in Wisconsin to vote for a certain judge, right? Just like democratically funded NGOs and charities and political funds are paying Tesla protesters. Both facts, right? Maybe you don't like one, maybe you don't like the other. I've given you two. One is Republican, one is Democratic funded. You could like both, you could dislike both. It doesn't really matter, but it doesn't change the facts. They don't become lies just because you disagree with it. It doesn't fit your global view of things, right? So, I see what you mean. However, you cannot truly disagree with the fact. Yes. Okay. Is the market crashing? Well, it's not looking wonderful. I think that would be the way to look at it. 0.5% down on the S&P today is not as horrible as it could be. On the QQQ, we're down 0.3%. The fear index is up only 0.6%. So we're kind of stabilizing in red land here. That's the way I would look at that. So not as bad as it could be, but we're also only one day away from the big announcement, the big orange announcement. And therefore, if you wanted to sell, you've probably already sold. If you wanted to buy the dip, you've probably already done it. So you're kind of just going, how about we do nothing today? So I wouldn't be surprised if today comes in with very low volume because it doesn't really make sense to do a lot today. That's what I'd say. Calm before the storm, precisely. That's what happens, right? So we are here. I'm in Hong Kong at the moment. In the summer, we get these big, beautiful hurricanes, and just before it really hits the fan, it's beautiful. It's still. There isn't a breeze. The sky is blue, and you're like, we've got a couple of hours before we really gotta shutter the windows down, and then the stuff hits you, and that's precisely where we are in the market right now. So I would do very little here. Is that yellow line the 200 days, says George? No, that's the 50-day. My 50 is always yellow. The 200 is that sort of shit-colored brown thing there, where nothing good happens below it. So if you want to look on, say, the S&P, we're below the 200. On a lot of the major tech stocks, Palantir is one of the exceptions that is above it, but things like Tesla, for example, are below the 200, which is why this is a little precarious. Are you going live during the Trump announcement? What time is he announcing that? Do we know? Let me have a look. Is it on our little is it on our calendar? Probably not, because it's an unusual event. What time does he speak? No, it's not on here. By the way, we are getting today job opening data out, which will have some impact, not as much, because obviously everybody is glued to tomorrow. Anybody know what time, Eastern time, El Presidente speaks tomorrow? Joshua, I did realize tariffs are being announced tomorrow. It was sort of a little thing that Winston had told me about here. And look, there are two outcomes. I'm going to put out a full video on that with some more data and statistics and so on, and some reviews on what's coming up. It's coming out after this one, so make sure you're subscribed. But it could, of course, be that we've priced in the worst outcome and that he is announcing something that isn't as bad, which he's done in the past. So he makes you kind of terrified, and then what he announces isn't as bad. Because the demands are, like him or loathe him, the man's a very good negotiator, right? So his negotiating tactic is to hit you in the face and then ask for a compromise. And the harder he hits you in the face, the less likely you're going to want to get hit in the face the second time around. So that's sort of his negotiating tactic, and call it bullying, call it smart strategy, whatever, it doesn't matter. So we're already seeing Europe's caving in a little bit, right? Maybe some of the others. Canada, he specifically didn't mention them in his last statement. So maybe Canada has caved somewhat. I think Mexico is keen to cave. So it could well be that the announcement could be better. And he could say, yeah, we've agreed on something with these guys and therefore it won't be as bad. Or he wakes up and goes, let's just go like really heavy on this and just announce 25% tariffs on everything that moves, in which case the market's going to crash. But yeah, there's some data out on that. I'll put that out for you later today, but nobody knows. It's a coin toss. It literally is a coin toss. So what's the smart thing to do? Prepare for the worst case scenario. And then after the fact, act on the good news if there is good news. It's very simple. So that's what I would do. That's what we've recommended all of our students to do. And it's what everybody I know in banking and so on is doing. It's just be careful, be cautious. Grok says no confirmed time yet, Mark. Oh, you got to love that guy, right? He's just keeping the world on its toes and yeah, keeping volatility maximum high. I mean, really, literally, if you want to cause market fear, this is how you do it. You just tell them, it could be big, it could be terrible, it might be good, it could be terrible, and I'm not sure what time I'm going to tell you, but I'll tell you at some point tomorrow. So it'd be interesting to see when it comes out. Wednesday, not tomorrow. Isn't tomorrow Wednesday? I never really know, because when you don't have a job, you never really know. It's Tuesday today, so it'll be Wednesday tomorrow. So I haven't lost my marbles entirely yet. At least Winston knows what time of the day it is, don't you, Winston? Yeah, there he goes. So Elite, you want to get some of that protesting money? Oh, there is some Twitter threads with all the sort of NGOs that pay out. I'm sure if you apply, they will very happily send you a check. Scott says tomorrow is Wednesday. Yes, for me too, Scott. Thanks, though. Any news regarding your book? No, I've done an outline, and I need to now fill in the outline. I was actually chased on that today, which I do need to do. But I was working on something which I thought was a little bit more important today, which I'll also tell you about probably next week. But yes, there is a book in the works that I need to sit down for a few weeks and knuckle down on that. Jago wants protesting money too. Okay, brilliant. I don't know what time it is, Greg. That's okay. I wake up like that quite a lot. I have a lot of friends who are all gainfully unemployed like myself. And we often say, let's meet on Thursday. And then half of them don't show up because they thought it was Wednesday or Friday. It's very silly and very embarrassing, but it keeps us entertained. George, one of us tried to reach you yesterday. Possibly. If you're ever unsure if somebody's reaching you is actually one of my people, what you can do, my friend, is you can drop me an email. And that way you always know that the people you're speaking with are my people. Same for anybody who ever gets an email, or especially if it's on social media. Be careful on social media, because a lot of people who copy my account and they'll just change like one letter. We report about a dozen of them a day, literally, and they're X and Facebook, and they're all just, Facebook is probably the worst place for it. Instagram also is a cesspit, which is why I don't use it anymore. But yeah, you can always just drop me an email with a screenshot and say, hey, is this guy, is this you? Am I really talking to you? Generally speaking, if I'm asking you to pay me money in Bitcoin or into a numbered account in Switzerland, or a cash deposit at a local corner, it's probably not me. And that's a real thing, by the way. People do that. So Blue Snow, love your mentors. They've really helped me so far. I'm very, very glad to hear it. They're an amazing bunch. We literally chat every day. We've got this amazing WhatsApp group of just wisdom and a lot of inappropriate humor. Winston coins. Oh, yes. If people ask you to pay in Winston coins, then definitely do. Winston, have you launched a Winston coin? Have you, Winston? Oh, he's moved. Why has he moved? Where did you go? I can't see him anymore. Where are you? There you are. Winston? Winston, have you launched a Winston coin? Maybe he has, and he's keeping it from me. If you have to pay for it in tennis balls, it's very likely that it is one of his. So there we are, my friends. If you haven't already, gone and learned the wisdom of about 50 years of Chicago and Wall Street traders and investors, you are missing out. How do you get access to that? Very simple. You go to felixfriends.org/get-free. It is the link that's pinned to the chat. It is the first link that you'll find in the description, as they say in some places of the world. And I'm just posted it in here again. And you will learn the rules that'll make you a much better, much calmer, much happier, and most likely much more profitable investor. And that's what I want for you. That's the whole point of this whole community. Why do I share what I do here pre-market? Because it's fun. I enjoy it. I really get a kick out of you guys doing well. And so many of you keep sending me these lovely messages. Keep doing that. It motivates us to keep going. And I wish you a beautiful day. And you know what I'm doing today? Absolutely nada, nichts, zero, because I think that's the smart thing to do. So I wish you a beautiful day. I'll see you tomorrow on Liberation Day or whatever it's called, and we'll have some fun and we'll see what happens. All the best.